Well, this is about to blow up in a big way. Now, whenever people in the past have said the U.S. national debt is a problem, I've heard a lot of people, and maybe you have as well, say, well, people have been saying that my whole life, decade after decade. They've been saying the national debt's a problem, but it hasn't been a problem. Well, all of that is about to change in a big way. And in this video, we're going to talk about why. We're also going to talk about there's no policy change that can be implemented that can avoid that. Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. So what am I talking about? What's going to blow up the U.S. national debt in a big way this year? Let's start with this right here. This is from CNBC. It says the battered bond market starts 2025 facing some difficult issues about debt. Nearly $3 trillion of U.S. debt. So for those who aren't aware, we have over $34 trillion in debt. So this is almost 10%, not quite, of U.S. debt is expected to hit maturity in 2025, much of it of a short-term nature. That could provide another headache should the market not be prepared to absorb what is already expected to be massive Treasury issuance as the U.S. finances a nearly $2 trillion budget deficit. So for those who don't know, much of this in the post-COVID, during the pandemic, we saw interest rates go extremely low. And we saw, 2% mortgage rates. For those who remember, I wish we could have those today. Many of you do as well. But the debt, rather than our government officials and their competence saying, let's finance the national debt for 30 years at these super low rates. They did that in Austria. I think Austria actually issued a 100-year bond at 1%. Well, that was really a smart thing to do. But the United States did not do that. They used all these short-term funding mechanisms, which was fine until they come to maturity and they have to be rolled over at higher rates. And that's what we're seeing about to happen this year. It says, as if the bond route in 2024 wasn't bad enough, fixed income investors face multiple challenges in the year ahead, including one under-the-radar worry about short-term notes coming due. Nearly $34 trillion of U.S. debt is expected to hit maturity in 2025, much of it of a short-term nature that the Treasury Department has been issuing in large amounts over the past few years. So the incompetence has come in large amounts over the last few years. With the government expected to try to lengthen the duration of that debt, when it's time to roll it over, it could provide another headache should the market not be prepared to absorb what is already expected to be massive Treasury issuance as the U.S. finances a nearly $2 trillion budget deficit. Quote, if you assume that we're going to be running trillion-dollar-plus deficits beyond 2025, and I would say that's a very good assumption, then eventually, cumulatively, that will overwhelm the T-bill issuance. Tom Tezoris, head of fixed income at Strategos Research Partners, said Tuesday on CNBC's Squawk Box. This goes on. It says Treasury Secretary Janet Yellen faced criticism earlier this year from congressional Republicans and economist Nouriel Roubini, who charged that the department was issuing so many bills in an effort to keep near-term financing costs low and goose the economy during an election year. Scott Bessent, President-elect Donald Trump's choice for Treasury Secretary, also was among the critics. However, yields have soared since late September, just after the Federal Reserve took the unusual step of lowering its benchmark borrowing rate by 0.5 percentage point. So let's take a look at that. Here's the U.S. 10-year Treasury yield over the past 5 years, and you see a lot of this was financed in this time frame here. Even, a year ago, if we go back to a year ago, we were looking at rates around 4%. Now they're 4.5%. So they're having to roll this debt over, and they're trying to extend it for 5-10 years out into the future at much higher rates. Because again, these weren't financed at the 10-year rate that was down here. The 1 year, the 2-year rate was even lower. So now they're going to try to roll this debt back over, and they're going to have to do it at a much higher rate. And guys, that is a big problem. Why? Well, let's take a look at this. This is from the Federal Reserve Bank of St. Louis. This is interest on the national debt. So interest payments alone on the over $34 trillion in U.S. debt. And we see how that's gone from 5 years ago, $508 billion, to, as of the end of the fourth quarter, $1.1 trillion and rising. And guys, this is going to become even a bigger problem as we see in the days ahead, as this debt rolls over and refinances at higher rates. We're going to see this amount go up, which of course adds to the debt, which adds to the interest on the debt. It's a compounding problem. And guys, there's an even bigger problem looming, because this isn't a problem for the U.S. government alone. We also see things like this. This says the looming maturity wall and funding gap. It says during the pandemic, an unprecedented amount of counter-cyclical fiscal and monetary stimulus was provided to the U.S. economy to address a steep and sudden recession. Congress provided over $1 trillion of fiscal stimulus through programs such as the Paycheck Protection Program and the Employee Retention Credit Program. In addition, the Federal Reserve dramatically reduced the federal funds rate and thus greatly decreased the cost of borrowing debt. As a result, companies were able to incur debt at record low interest rates. Many companies and business owners took advantage of these very low interest rates and incurred large amounts of debt. However, many of these loans will become due within the next few years. We are thus seeing the effects of this maturity wall and funding gap. In other words, a large amount of debt will come due in the next few years, and companies will not be able to refinance their debt at the same interest rates, or perhaps even refinance for the same principal amount, which means whatever they can't refinance has to be paid back at that time. Multiple investment management firms and financial news providers have estimated that over $1.5 trillion of commercial real estate debt will mature by 2025. We talked about that a number of times on this channel. In addition, $3 trillion in corporate debt will need to be rolled over in the coming years. One issue related to replacing this debt is the consensus that interest rates will be 4 to 5% higher over a longer period, and that creditors may not be willing to lend similar principal amounts. For example, a debt issued in 2020 of $900 million with a 4% interest rate will not be repeated in 2025. Instead, a bank may be willing to make a loan for $350 million at a 7.5% interest rate. This leaves $550 million funding gap that will still need to be paid off, as well as the higher cost of servicing the remaining debt. And what does that do to operations for those companies? Debtors may have to turn to private creditors or other alternatives who still may not lend a company enough funds to cover the outstanding debt. This looming maturity wall is beginning to arrive now. The more quickly corporations can foresee and address these issues, the more maneuverability they will have in controlling the process. And guys, those that can't, or even those that do see that and have the flexibility, the maneuverability to make those moves, if they're already surviving on the edge as is, this will push them over the edge into bankruptcy. So expect to see a number of corporate bankruptcies as these loans come to maturity and they need to be rolled over, and they cannot be. We've talked about this, and they mentioned it here in regard to commercial real estate. We see that in a number of other places within the real estate market as well. So we read here in Bloomberg It says landlords face a 1.5 trillion commercial real estate maturity wall. It says landlords for offices, apartment complexes, and other commercial real estate have $1.5 trillion of debt due by the end of next year. According to Jones Lang LaSalle, that leaves a gap of as much as $400 billion between the amount owed and the capital available for refinancing. In other words, there's going to be a lot of companies having to cough up collectively $400 billion. Odds are they don't have. So we're going to see bankruptcies, we're going to see foreclosures in some of these commercial real estate properties, apartment complexes. You see big problems as a result of this. It says the value of buildings has broadly dropped after higher interest rates boosted funding costs for property owners. Those lower valuations make it harder for landlords to borrow as much, forcing many property owners to raise equity capital to secure new debt or extend their existing facilities. Apartment buildings, which make up about 40% of the looming maturities, are at the center of the refinancing wave. Many U.S. owners of the assets known as multifamily bought their properties using 3-year floating rate loans during the easy money era. Interest rate increases since then have eaten up much of their rental income, making it a challenge to secure additional equity. Rising insurance costs and falling values have added to the pain, leaving about $95 billion of U.S. properties in distress or at risk of becoming so, according to data compiled by MSCI Real Assets. So guys, we see this problem with the U.S. national debt, with commercial real estate, and corporations. This is a problem across the economy. And guys, we pointed this out some time ago. So back on brittgillette.substack.com, we had this article come out back in August about how the current global financial crisis leads to biblical tyranny in 10 steps. And step number 2, if you remember, was this: debt hits its limit. It says eventually the world will hit peak debt. The ability of consumers, corporations, and governments to take on new debt will hit its limit. We are on the cusp of seeing that, guys, right now. Our current monetary system is a debt-based monetary system. Remember that. We'll talk about that in a second. This means in order to continue functioning properly, it requires the creation of ever greater amounts of debt. Essentially, it's no different than a Ponzi scheme. It is a Ponzi scheme. In a Ponzi scheme, once new investors can't be brought in, the entire scheme unravels. It falls apart and investors lose everything. In the same way, once more debt can't be taken on, the current monetary system will implode. As individuals, corporations, and governments fail to take on new record levels of debt, the currency supply will shrink. This will lead to a cascade of defaults and bankruptcies as the world descends into a deflationary spiral akin to the Great Depression. Guys, what we just talked about with the financing issues with rolling over this debt for the U.S. government, for corporations, over $3 trillion in corporate debt having to be rolled over, $1.5 trillion in commercial real estate having to be rolled over, these multifamily housing units having to be rolled over. This is the world hitting its debt limit. And we're going to descend into this deflationary spiral. We also talked about this on brittgillette.substack.com. This was from back in May of last year. 6 potential triggers for the next global financial crisis. And guys, we're in some form or another of about the first 4 of these, seeing these happen. Chinese property market meltdown. We know that Barclays came out about a month ago and said that $18 trillion in value has been lost in the Chinese property market since 2021. That's 50% more than was lost in the United States during the Great Financial Crisis and the subprime real estate bubble bursting. A Japanese currency crisis. This may not be in the headlines, But we're in the midst of it right now. It'll break out into the headlines soon enough. We talked at that point about the yen carry trade, and we saw that rear its head back in August for about 2 or 3 days. But guys, it will take a lot longer than 2 or 3 days to unravel that. They simply papered over it and kicked the can down the road to another day. But that day is coming soon. German deindustrialization, we are seeing that. No doubt about that. We've talked about that. U.S. commercial real estate crash. We've been seeing that. We just talked about another $1.5 trillion that needs to be rolled over. Widespread bank failures. We haven't seen this yet. But guys, with all of this looming, that's coming next. You can be sure of it. And of course, well, the rapture of the church. We could see that at any moment, guys. And for a long time, I've talked about why have these issues not just broken the back of the global economy? Why have we not seen this crisis emerge at an epic scale much sooner than we have? Well, some people have pointed out, somebody pointed out last week, and we've been pointing out for a couple of years now that maybe God's holding all of this back, and the rapture of the church will be the pin that pricks this bubble and assets and debt and causes this collapse. We don't know. But guys, we know that we're facing a major problem right now, and this is going to lead us into a crisis that I believe sets the stage for the mark of the beast system. So let's read the last conclusion to this article, which plays right into what we started with, the U.S. debt and the skyrocketing interest being paid on that. It says the United States is $34 trillion in debt, and interest on the national debt alone is over $1 trillion per year. In fact, interest on the national debt now exceeds defense spending. This means the United States, the world's largest economy, has bubbles in its 3 largest financial markets: stocks, bonds, and real estate. On top of these massive bubbles is a global derivatives market in excess of several quadrillion dollars. No one in the world truly understands how many derivatives exist or what would happen to those derivatives in the event of a major global financial crisis. This means the global financial system is nothing more than a house of cards ready to topple over at any moment. In fact, such a collapse is inevitable. Mathematically, it's inevitable. The only questions are, when will it happen and what will trigger it? When the crisis takes hold, you can be sure the solution offered by politicians and central bankers throughout the world will involve granting more power and control to centralized government authorities. They've made no attempt to conceal their desire to roll out central bank digital currencies, and the next crisis will give them the opportunity they seek to offer central bank digital currencies as the solution, along with, I believe, tokenized assets and digital IDs that'll create the backbone of this new system. This means tyranny on an unprecedented scale, and it sets the stage for the mark of the beast system outlined in Revelation 13, verses 16 through 17. The stage is set, a crisis is coming, but the good news is that all these things are happening means something else is coming. The rapture of the church and the second coming of Jesus Christ at the end of the tribulation. Guys, we are in this time period. Jesus said to look for certain things. The prophets said to look for certain things. We see many of those signs. We've been over those multiple times on this channel, and we see those signs. And Jesus said, when you begin to see these things take place, know that I'm near, I'm right at the door. So we're on the cusp of that. We're also on the cusp of this great financial crisis. I believe the greatest financial crisis the world has ever seen. The worst economic calamity the world has seen since the Great Depression. We're going to head into a deflationary spiral as a result of the world hitting peak debt, hitting its limit. Probably won't be peak debt forever, but it will be peak debt for the moment. And again, once that debt stops growing, the Ponzi scheme collapses, just as when a Ponzi scheme can't find new investors, it collapses. So guys, can anything stop this? I've heard a lot of people say, well, when Trump was elected and Trump's coming into office, can Trump stop this? No, Trump can't stop this. Even if Elon Musk and Doge succeed in cutting massive amounts of government spending, remember, and I pointed out, remember this when we were reading it a few minutes ago, our monetary system is a debt-based monetary system. It counts on ever-growing amounts of debt in order to prevent its collapse, in order to not implode. And if the U.S. government spends less, that means the Treasury is issuing less. We're seeing less treasuries being issued, less borrowing taking place. That actually creates the dollars into existence that the government then spends into the economy. If that portion is taken away, then you have a shrinking currency supply, and it actually makes this happen much more rapidly than it would happen on its own. So nothing can stop this deflationary spiral. It's basic math. What can't be paid back won't be paid back. Guys, the bill must be paid. The pain must come from all of these decades and decades of poor decisions that have been made, of mismanagement, of incompetence, of corruption by government leaders in the United States and across the world, and this evil debt-based monetary system they've created. They know it's coming to an end. They know it's set to collapse, and they're putting the pieces in place right now for the new system that they hope will help them maintain their control. Again, that system is central bank digital currencies, tokenized assets, digital IDs, as that's what's coming. That type of system is indistinguishable in function from the mark of the beast system. It's not the mark of the beast. That won't come until the tribulation period. But we're seeing the pieces being put in place. We're seeing the stage set for that time period right now, right in front of our eyes. All that's needed to unveil that new system is a massive crisis that makes people clamor for the solution. And guys, they're ready and waiting in the wings with that solution. So guys, we're getting close to many things happening here in our day and time. Jesus said, when you see all these things, know that I'm near, I'm right at the door. So you should be filled with hope, you should be looking up, and you should be filled with a sense of urgency to share the good news with as many people as possible while we still can. So guys, let me know what you think. Leave your comments below, and God willing, I'll see you on Friday.